So, exactly how did we get in this mortgage mess? The land title system that went largely unchallenged in the United States for centuries became an obstacle in the 1990s. That's when financial firms began to ramp up a process called securitization, bundling and selling pools of homes to investors. Each time the loans were reassigned, the new owner had to record the transfer with the local clerks. The reassignment was a slow process, so the mortgage giants created the Mortgage Electronic Registration System, (MIRS), to speed up the loan securitization process. But as millions of homes fell into foreclosure, the lack of a paper trail left the ownership of mortgages in question. So let's look at how the process works. As with any typical transaction, the new homeowners took out mortgages with banks and other lending institutions. As banks and other lending institutions accumulated mortgages, the need for more money to lend arose, and as a result, the previously issued mortgages were bundled into mortgage-backed securities and then purchased by various trusts. Companies set up to profit from the securities. Sometimes there were multiple trust companies involved, and sometimes they were traded multiple times. Every time the title of a loan was traded, local property laws required forms to be approved and notarized. Instead, firms used MIRS to trade much faster and in larger volume by tracking the ownership of the loans electronically. When the homeowners fell behind on their mortgages, the bank foreclosed on their homes. However, the ownership of the mortgage was unclear because of the lack of a paper trail. You may be asking yourself, so why does this pertain only to foreclosures and not regular or short sales? Regular or short sales have one thing in common, and that is the owner of the record must sign off on the contract to purchase, whereas a foreclosure is confiscated by the bank without the owner of record's consent. So, what happens now? Many of the foreclosed homes were not properly reviewed, but instead were signed off illegally, much like a production line, causing some homes to be foreclosed fraudulently. Each bank or lending institution will have to review their process for foreclosures and determine if they fraudulently foreclosed on any property. If they did, then restitution will have to be made. Regardless of the outcome, you can be sure there will be many lawsuits, and this matter will play out in the courts for some time to come. Is there any good news? After this storm, there may be a rainbow. The foreclosure process may be fixed so this can never happen again. In the short term, the news is mixed. If you are looking for a good buy via the foreclosure route, this may take some time, and many will have second thoughts about buying foreclosures. On the other hand, it should create a greater demand for regular sales or short sales, which should help those homeowners. In the end, and it might take a while, things have a way of sorting themselves out, and we will get back to a normal market.